German Chancellor Friedrich Merz has called for greater stock market integration in Europe in order to allow companies to avoid what he described as a fragmented market when pursuing a listing. Last week, I caught up with the CEO of the London Stock Exchange Group, David Schwimmer, at an IIF panel on the sidelines of the IMF World Bank annual meetings, and I asked him what he thought about the idea of a pan-European stock exchange.
If Europe were to have one stock exchange, it would be pretty clear which one it would be. I think, and I'm including the UK in Europe, of course, there. I think that the issue underlying the question is the concern about the levels of liquidity and access to capital in different markets around the world relative to the US. That's sort of the fundamental underlying issue, and that's what drives that kind of policy discussion. I think there is an opportunity to have greater consolidation among exchanges in the continent. I don't think that LSEG would be considered in that for political reasons. And I think that could end up being helpful in terms of attracting more capital and concentrating liquidity in one particular platform.
Well, David Schwimmer really putting it on the tee for us as the Euronext CEO Stéphane Boujnah joins us now, who says he welcomes proposals for greater consolidation and joins us to discuss more. Thank you so much for joining us. You just heard the reaction there from David Schwimmer, effectively saying it would be pretty clear which exchange it would be. I would assume Euronext, wouldn't it, if there was to be consolidation?
Well, as of today, Euronext trades 25% of the equity traded in Europe. Just to give you an order of magnitude, the aggregate market capitalizations of companies listed on the Euronext single liquidity pool, single European market, is above 6.2, 6.5 trillion euro. The aggregate market capitalizations of companies listed in the London Stock Exchange is around 3 trillion. The aggregate market capitalizations of companies listed in Frankfurt is below 2 trillion. So the single European Euronext market is twice the size of the London stock market, and is about 3 times the size of the Frankfurt market. So we have aggregated the single liquidity pool, the single order book, the single technology platform that is probably the basis for the aggregation of further consolidation. But we are where we are also because other stock exchanges in Europe have decided to, I wouldn't say walk away from equity markets, but to consider that there are better growth opportunities. You know, the reason why equity markets are less important in London and within the London Stock Exchange Group than they used to be is also related to the fact that the valuation multiples of the London Stock Exchange Group are much higher since they have decided to diversify away from that particular segment. So what we are observing, and the comment of the Chancellor is very interesting, is that there is an aspiration for from leaders who want to have a sort of full food chain of equity, savings, investment, capital markets on the one hand, and on the other hand you have operators, market infrastructures that have decided to diversify away in data, in post-trade, etc. Euronext, for historical reason, remains closer to equity markets. We believe that our purpose is to power capital markets to finance the real economy, to connect local economies with global markets. Other exchanges very often, in particular the ones with much higher valuation multiples, have decided that it is not the purpose anymore. So that's why there is a debate between the aspirations of leaders, and we are more connected with the aspiration of European leaders because of this commitment to the financing of the real economy.
A not so subtle swipe at the London Stock Exchange, LSEG, which has gone after data services and seen a very strong performance as a result of those data services business. But if there were to be a consolidation, if Europe was truly to go towards a single stock exchange, would there be any choice for LSEG but to join in or be left behind?
Well, I mean, M&A is a consenting adult game. So owners...
Or a lack of other options.
Which is another form of consenting. They would have to build their strategy and to decide what they want to do. One thing is clear, we are available for any form of consolidation. There was a time when London was the largest financial center in the European Union. With Brexit, London has decided to become the largest financial center of the United Kingdom. But it's clear that you can't fight geography and you can undo history. equity capital markets in London used to be the core of the European capital markets. So if at some point of time there is an appetite to consider that consolidation, of course will be available.
So you would consolidate with LSEG if you could?
Well, if this is, but it is not a question of us being a willing buyer. It's a question of whether there is a willing seller.
Stéphane